go ahead and kick off the session right now on stocks. Chris, go ahead and get started. How you doing, my friend?
Yeah, doing really well, Gary. Thanks. Happy Monday, everybody. Nice to be back for episode 2 of the investment draft. Tyson and I wrapped up our equities on demand class today with a super busy week. We actually, we try to keep those sessions, right to live trading and get to the point. We just had a lot to cover today. So between Tyson's income plays for the week and my option expirations on credit spreads, some positions, we have like 22 to 25 positions running this week, Gary. I'll go in alphabetical order. If anybody's interested, you're taking some notes, you're checking this session out. I have Workhorse, Skills, Fisker, Arrival, SoFi, Rocket, Alcoa, BlackBerry, Body, Ford, First Horizon National, GGB, KPLT, Catapult, Lots, MVST, AT&T, UWMC, and United States Steel, which is X. That's just the tickers and symbols that I just rattled off, all of which we either have income plays on this week. The strategy we're using, if you're interested, it's called a Jade Lizard. We do that a lot, actually, to lower our cost basis and collect some extra credit for the week. I do a lot of credit spreads this week. I closed out already a couple. I rolled one of my covered calls up in Alcoa up for some additional credit, and that's been one of my best positions the last couple of months, is just being bullish in Alcoa, bullish on United States Steel, bullish on CLF, bullish on some energy plays and infrastructure. I think we have a great mix right now, Gary, of growth and value. I think one thing that we're seeing, last week's stock market, everything was down. I've got it right here, not off the top of my head, but I recorded it. The Dow Jones was down 2.15% last week. The S&P was down 1.69%. The NASDAQ down 1.61%. So we had one of the worst weeks in stocks this year so far since June. So everything was in red. We had multiple days to the downside. The IWM, the Russell 2000 still sideways. The Dow still sideways, struggling to break highs. We have some very real things hitting the markets. We have some, job concerns with the Delta variant and COVID striking up again. Unemployment benefits have expired. Eviction moratoriums have expired. I think that, the economy is kind of getting hit with some reality. And we're starting to see a little bit of investor uncertainty going into this week. It's also one thing that traders can note is you can look at your chart of the S&P 500. You can see that we've had these solid half-month sell-offs. Like every time it's the 14th, 15th, 16th of the month, we tend to see these 2-3% corrections and bearish moves in the indices. But one thing we can watch is how does the market respond this week? Does the market continue to slide lower this week in a correction phase? And how do we fight back next week? Right. So if we have a week in red again, and we don't fight back next week, then we truly are looking at like the September effect, which is, historically speaking, September is the worst performing month in the stock market. So it's really just playing out history. We've been ready for it. I mean, I know we've talked about it in this series here. We've talked about it in our trading rooms, Gary. We know that the markets, it would make sense technically for a correction. Things are overextended. Things are, there's lots of divergence out there. But again, I'm looking for a correction, not necessarily a bear market. And so I think a correction is healthy. I think a correction offers traders and investors an opportunity to buy things on sale at great prices. So if you like the stocks you're in, keep them and buy them cheaper. If you're looking for opportunities, stay patient, keep scanning. And I think we're going to find a lot of opportunities here in the next 1 to 2 weeks. So that's a great thing coming from the stock side, is we have a lot of opportunities, balanced portfolio, some income plays, and whether the market, continues to go lower, we will buy great stocks on sale. It goes higher. We've got spec plays, we've got growth plays, we've got value plays that are all working, really nicely. So in that sense, as we're cautiously bullish and cautiously optimistic, we're trying to position ourselves accordingly with our portfolits.
So, Chris, quick question on the September trading in the stock market, right? Yeah. What makes it so? I won't say terrible. What's so not so great with the September trading in the stock market?
Yeah, a lot of times what happens is, coming out of summer trading, you have this post-summer breakout where volatility increases. September is also a time for some tax loss harvesting, which is, by the time you've gone 3/4 of the year, getting into September and you're kind of wrapping up for Q4, if you've got some losing positions, you can take those losses and then still, use that cash available, use that remaining margin, and then buy things you want or get repositioned to buy things for a Q4 rally. So a lot of times what happens, across the board is we have investors that are willing to take losses on crappy instruments or, losing trades that they're like, what, it's not coming back. I don't want to just sit and get stuck in a position, but instead use that cash and margin, realize some losses, tax harvesting to lower that the total tax exposure. And, we're at a time now where things are starting to change. Like there are some pretty heavy tax reforms. We're looking at, capital gains taxes might be changing. The corporate tax structure might be changing. The personal income taxes, inheritance taxes, all these things might be changing over the next couple of years, for better, for worse. I'm not here to have that conversation, but I'm saying that's what happens in September is kind of the worst performing month historically, is we see a negative September across the board. And usually the S&P 500 is kind of the benchmark for that. So a lot of it is just willing to dump bad positions, Gary, and then use that cash and reallocate and go more long-term investing to, finish the year out strong with Q4 and kind of get that Santa Claus rally post-holiday.
And so is it true that if you look at the dollar index, right, if the dollar index starts rallying, it means more people are moving out of more high-risk portfolios and moving back into cash, which means that the stock market could be selling off a little bit if you've seen the dollar rally. Could that be a good?
Yeah, I think that's a great observation in the markets. We've been watching the dollar index, and this, Gary, from these sessions. I mean, I've literally had the play on the dollar index of I'm long dollar Swiss, I'm long euro dollar. I don't have really a clear direction on the dollar index. I think that we could go up to 12,090 on the dollar index. That's a yearly pivot. We could get back to those wave 4 highs from the larger sell-off. We also have the dollar index in a potential multi-year range coming off support. So I could see a case where the dollar does get stronger. I think that, again, we're kind of like in limbo with the dollar because what's the Fed going to do? Ultimately, what's the Fed going to do? Are we going to taper? Are we going to start talking about, and I say talking about raising interest rates because I think the Fed is truthfully a long ways away from it. I think most central banks are truthfully a long ways away from it. But it doesn't take much to have that little narrative planted out there. You hear this saying a lot: buy the rumor, sell the news. Buy the rumor, sell the fact. And so if the rumor is there's going to be tapering, if the rumor is the Fed's going to start raising rates, that will change the risk on versus risk off kind of mood in the markets. So what is your direction right now, Gary? Like, are you overall bullish on the dollar, overall bearish on the dollar? I've literally been hedging because I'm dollar Swiss long, euro dollar long, and one of those pairs is going to pay me. And last week it was dollar Swiss. This week it's still dollar Swiss, but it's like I still like the position of euro dollar long off the lows at 1,700 and 1,650.
Chris, I think we need to remind everyone about smashing that like button because if they've liked the content, they've enjoyed the session. We're going to continue to do these sessions weekly. Go ahead and support the channel. That's the way you support the channel, by smashing that like button. All right, guys, that's it from us. Have a great week of trading. We'll see you next week, same time, same place. This is the team saying cheerio.